for me, the biggest thing in my team is just sitting down with a client and asking the right questions. It's that simple. Not like, my phone, I get calls every day. Hey, I'm looking for a quote. I don't just give quotes. And what I mean by that is not that I don't want to help people. I love helping people, but I have so much more to offer than just giving you a price.
You're listening to the DORE Podcast, where we spotlight the people, ideas, and businesses keeping Ottawa running. From contractors to real estate investors, entrepreneurs to industry experts, we dive into real conversations and help grow everybody's pie.
Episode 36, Hub International.
So welcome back to another episode of the DORE Podcast. I'm your host, Dan Dore, and today we're excited to sit down with Karim Zein from Hub International. So Hub is one of the world's leading insurance brokerages, helping businesses and individuals navigate risk, protect their assets, and plan for the future. We're going to dive into Karim's journey, the values that drive Hub, and explore the strategies and trends shaping the insurance industry. And today, Karim, you're joining me. Welcome to the show.
Thank you, Dan, for having me. I appreciate it.
Yeah.
Looking forward to this day. So
yeah, that's
nice
good. Well, we were looking forward to you when we saw all the credentials and the stuff you were working in. We're like, wow, this is going to be a fun chat to have.
Yeah, no, I appreciate that. I've been watching a lot of your podcasts and stuff, and I just thought I reached out to the team and I said, nobody really talks about insurance, and what a better opportunity than to be on the podcast and just kind of chat with you, your space, what you're in. And like you said, there's so much to talk about, a lot of misconceptions in the industry, people have and whatnot. So just excited to just kind of talk shop.
Yeah, no, talk shop is what we do here.
Yeah, I love it. I love it.
So Karim, tell us, what is your journey? How did you get to be a representative of Hub International? And I mean, obviously from what we can see, Hub International is not a small player.
No, it's
tell us, because obviously we were just chatting before the podcast. Yeah. You've been here. You lived in Ottawa since you were the age of 5 years old.
That's right.
Tell us how this came to be.
So honestly, it's like I say, by fluke. A lot of times, people fall into specific segments of businesses or careers or whatnot. I've been all over the place. Most of my life, I worked in hospitality, which is I still passion of mine. I love hospitality, restaurant industry. 15 years old. I worked for a long time. Are you familiar with Al Steakhouse?
Yes.
Of course. So it's an institution in the city. I was there 15 years old, bussing tables.
Did you start from bussing tables?
Yeah, ultimately too. Yeah. But it was fun. It was great. But then you learn, it's not a career. Hospitality, it's hard. You can't have a family. You work weekends and stuff. So moved from that. I was in telecommunications. I used to work for Rogers as a subcontractor.
No way. Okay.
Yeah, I did that for about 5-6 years.
Yeah.
Then I finally felt like I was missing something, and I wanted to get a career where I can kind of.
And what were you doing at Rogers specifically?
Just a technician.
Okay.
Yeah, so cable guy ultimately is the best way to kind of look at it. On
residential side. On the road?
Yeah, exactly.
Okay, going on the road, okay.
If you call, then, you wanted internet, TV installed, home phone at the time.
Okay.
The East was my territory, so most likely from Cumberland all the way to Vanier.
Okay.
So you would have,
we might have met before.
It's very possible, yeah, absolutely.
You know our videographer.
Yeah, no, exactly. Small world. And I always said, we were talking about this, Ottawa's a small, big town in a sense, right?
Yeah.
You run into people or spouses of people and stuff like that.
Yeah.
So it's always nice to chat. So at that time, I was ultimately looking for a career. And I think at that point, I felt like sales was kind of my calling. And when I say sales I'm a people person. I love people, love interacting with people, love meeting people. So, what better way than sales? But for me, I always say sales is kind of not a dirty word, but it's more of relationship building, what I look at right now, and advocacy. That's the biggest thing what I do. But I started off, I worked at National Bank of Canada doing mortgages for about 1.5 years. Prior to that, I knew a guy who was in the industry, and insurance for the most part, it's not branded as a sexy industry, or, usually when you look at mortgage brokers, finance, real estate, realtors, everyone's dressing nice, pulling up in nice cars.
Pretending. Yeah.
So that industry appeals to a lot of people. For insurance, and we'll get into it, but it's a very lucrative business, lucrative industry, so many different options you can get into. So I was at a baptism, and one of my friends, or my cousin's friend, was there, and we started chatting, and what do you do? And he told me, he's like, oh, like, this is what I do. I'm in insurance. Started talking to me more about the business and just the model and how it works. And ultimately, you're building a business within a business. Right. So
what do they call it? Entrepreneur?
Yeah.
Type environment, right?
Exactly. So at that time, I went and got my license to become an insurance agent, and I didn't have any experience because I was working, in cable and whatnot. So more or less, I went and got my license. Nobody would hire. And then I fell into, a good buddy of mine was a broker at or a mortgage agent at National Bank. And I reached out to him and said, hey, can you introduce me to your manager? So I met with him and just kind of started from there. Did that for about a year and a half. And then things were going really well. Things were taking off. But I had a call from one of the persons I interviewed in insurance, and he just caught me. He was now my mentor. We've been working together for 8 years. Yeah. And then we went out for lunch, and I knew what he wanted when he called, but I said, hey, let's go chat. And at that time, things weren't going great for me at the bank. So I just thought it was like a faith in a sense, right? It was like,
absolutely.
Hey, out of nowhere, he just called, and I'm like, what are the chances? So within 2-3 weeks later, kind of jumped ship and then started this whole new career from finance to insurance.
And was your mentor, was he in insurance?
Yeah. Exactly. He's been in the industry for 40 plus years.
Good for you. Good for you.
Yeah. Great person to learn from.
Yeah.
But for me, my mindset was like, oh, insurance, like if I can just get somebody a better price, like how hard could it be? That's not the case.
Yeah. Good.
Right. So it's been a great ride, a lot of learning. I've been with Hub for 7 years. So what happened is he brought me onto another brokerage. He had left that brokerage and moved over to Hub.
Okay.
And then I followed him.
Sure.
And then ultimately, we've been in Ottawa, building Hub office in Ottawa ever since.
Okay.
Yeah.
So you've been with Hub how many years though?
7 years.
7 years.
7 years now. I've been 8 years in the industry.
Because my understanding, and you correct me if I'm wrong, is you're trying to penetrate more of the Ottawa market. Did I get that?
Yeah, that's it.
Okay.
So Hub's we're the largest, fifth largest broker in the world, largest broker in Canada. So we have a ton of offices across Canada, from out west to out east, more or less.
Okay.
We have very big presences in Toronto, Montreal, Vancouver, stuff like that.
Okay.
Ideally the goal has always been and has been just to grow the presence in Ottawa. So.
And is Hub? So it's a brokerage. So you're a third party agent for insurance providers.
Exactly.
Interesting.
Exactly.
It's so funny. One of the things I've been in real estate. Starting from essentially nothing, getting 1 unit and 2 and 3 and 10 and whatever. And one of the things naively that I experienced with insurance and mortgages, which were kind of the same thing, is naively when I started, I thought that as I got more units and could show more experience, I'd get open arms, from lenders and insurance providers. And I experienced the opposite. I was all of a sudden I was classified as higher risk because I had more, and it was a really, really weird thing for me to experience. Like naively, I thought, okay, the more you can prove yourself, when you have more units, and people say, oh, I want your portfolio. But then all of a sudden now I'm like with 5 different insurance companies and multiple different lenders, and you're always like, okay, that's interesting. And the mentality is different when it comes to insurance and the...
Yeah, I agree. The lender piece, it's funny because they humble you really fast.
Oh my gosh.
You know what I mean? Like you said, to be honest, anybody starting in any business, you were kind of grew up on you have to have a relationship with the bank. You have to have a relationship with this person and that person. And for the most part, it's always been how business was conducted for the longest time.
Yep.
But I feel like even now, lenders, it's changed. It's all about risk. It's all about appetite. It's all about profile. 100%. And I find too now is there's no more of that handshake deals or I'm going to go out of my way to help Dan and stuff like that.
Well, I've actually had it both ways. So it's funny that the sense I'm getting is at first they're just trying to get you going. Then at one point they see you as too risky.
That's right.
And now it's like you're too small for the big guys, but too big for the smaller guys. So you're caught in One of my mortgage brokers years ago told me, she says, you become a round piece in a square peg.
Yeah.
It doesn't fit
That's
people.
right.
They can't fit you anywhere. So you have to go to different institutions. Anyways, it was kind of interesting. So it's, that's why insurance is interesting. We'll dive into
Insurance is a little bit different in a sense because I find depending on what your operations are, for the most part, there's specific insurance companies that could kind of write everything for you.
Okay.
But the problem in insurance is all depends on what you do. Mm-hmm. Some insurance carriers are more aggressive when it comes to a specific segment of business.
Exactly.
Right. So just to give you an example, let's say you had a real estate portfolio and you had a manufacturing company. Mm-hmm. Well, it'd be hard. Like one insurance carrier can be way more aggressive and give you better terms and conditions when it comes to your manufacturing company than would it be on your real estate portfolio. Mm-hmm. So just like anything, the beauty of working with a broker is like having access to different carriers.
Yep.
And then just kind of knowing the markets and which insurance companies specialize in what segments, who's giving better coverages.
So if I'm grasping this correctly, because I've got insurance with certain insurance providers that are not brokers, and so what if I'm understanding correctly is with Hub, I could have two different types of assets and could be in two different insurance providers, but all through the Hub umbrella.
Yeah, exactly. So ideally, you'd be working with my team and I, or another Hub representative. It all depends on where you are. But yeah, it's again, it goes back to like what your needs are.
Of course.
And that's really, the most important part. What are you looking for? What are you looking for from an insurance carrier, insurance company? We've had times where some people prefer specific insurance companies, even though they're more expensive because they've had, good dealings with them when it comes to claims and stuff like that. Right. Yep. So these are all things that like, we talk about advocacy a lot within Hub, and that's where like you need to have these discussions with your clients.
Sure.
Ultimately, any broker should.
Yep.
Give options. Everyone likes options.
Yep. Oh, absolutely.
At least talk about options. If I'm saying, okay, well, this is 10,000 and this is 12,000. Okay, but like maybe you say to me, okay, Karim, like why is this more expensive? Or okay, based on your expertise, like which one would you go with and why? Right? And that's the whole relationship component.
When it's quite important, but I mean, obviously coverages as well and relationship and
claim. And that's the thing. It really comes down to at the end of the day, like you're paying for insurance. It's a service you're paying for. You want it to respond when you need it. So it's like, okay, even if you pay, $5,000 a year for something, but a claim happened. You're like, oh, well, I shouldn't have skimped out on coverage and stuff like that. So we see that a lot, and we can talk.
No, that's awesome.
Into that stuff too.
No, that's great. And one of the things that we had touched on is the fact that you are, like, for the most part, it's a client-centered approach. Like, how do you, so let me restart that question. So how do you, like, what's your ideal avatar client? Is it somebody that owns a home? Is it somebody that owns, multiple things? Like, what is the ideal client avatar, or are you, wide-based?
That's a great question. Yeah. So I specialize in commercial insurance.
Okay.
So for me, it'd be business insurance, companies, people who have larger real estate portfolios and stuff like that. Why I say that is when it comes to just larger, like medium-sized to larger-sized companies, risk management plays such a big factor. And talking about risk strategy and how you're doing things. If you own like a corner store, there's not really much risk management you can talk to somebody about, right? It's more or less, hey, what's your price? Are all the coverages there? But if you have a manufacturing client that, is doing $10 million a year in sales, okay, now we got to review. Do you have contingency plans in place? What if these equipment fail? Where are you getting your equipment from? Do you have specific coverages for equipment breakdown? What does your business interruption look like, right? So we do deep dives into this kind of stuff. People with larger real estate portfolios. Yeah. What's your risk transfer look like? So there's a lot of things that go in. Every client is different. So when we talk about tailored approach, tailored solutions, for me, the biggest thing in my team is just sitting down with a client and asking the right questions. It's that simple. Not like, my phone, I get calls every day. Hey, I'm looking for a quote. I don't just give quotes. And what I mean by that is not that I don't want to help people. I love helping people, but I have so much more to offer than just giving you a price.
Right.
At DORE, we're more than just leasing agents, we're rental matchmakers. Our team is dedicated to matching the right tenants with the perfect home. With personalized service and a deep understanding of the rental market, We're here to help you find a place that you'll love. Inquire today and rent from people who care.
Yeah, so you go deep, because especially with commercial, this is not just say, I own a home that's worth $700,000 and type of deal, right?
No, because usually
that can be done through an app.
I'm not very well versed in the personal home and stuff, but for the most part, the insurance policies are pretty comprehensive. Really what we see a lot is for home insurance, people don't have proper water damage limits for sewer backup or flood or stuff like that. But for the most part, it's pretty good.
Yeah. No, and then so the client-centered approach, obviously, understanding the need and the assets, what coverage they need. I'm assuming you also see what their experience was like in the past. I mean, if you had a new client coming in, is there a deep dive that goes into their experience in the past with other providers, or how that, what worked, what didn't work, whether they're looking to change, or like, how does that work?
Yeah, it goes back to like having that conversation up front. Usually when people are calling you, they're unhappy, or maybe they just want to see what's out there and or whatnot, right? But once you kind of get into the conversation and saying, okay, like, are you happy with your services?
Right.
Yes. Okay, then why are you shopping around?
Right.
Because generally, a broker's job is to shop for their clients.
Yep.
You know what I mean? So
absolutely.
So that's the biggest thing. So if somebody's calling you, generally they're unhappy, or maybe they feel that you can give them better service. Sometimes I've had clients just switch over just due to service, not even a price thing, right?
Okay. Oh,
so it really depends in that aspect. But for the most part,
It's very similar to us in property management, where we get somebody that has 50 units, they reach out to us to manage the portfolio, and then when we go into the preliminary questions, understanding that they're being serviced by someone else, that's one of the first questions. We're kind of like, what's the reason? Right? Because usually there's a reason why there was a friction point, something happened, they're reaching out to us. And, there's just like you in insurance, we have legislation through the, Residential Tenancies Act. So in some cases, it's a matter of saying, what's the experience? Because we're dealing in the same industry. So whoever your provider was, we may not be able to remove the issue that you have, because we'd be exposed to it as well. So it's interesting. I think that conversation.
They do, in a sense, ask for background and stuff. It all depends on what you do.
Yeah.
Like if you're just a building owner, you own a duplex or triplex, it's pretty straightforward.
Yeah.
If you've had insurance before, like let's say you have a policy with Aviva and you want to switch to Intact, but you're going to a different broker, then we generally ask for like a claims history or a loss run. Yeah. So that just shows.
I think that's all registered on from insurance providers. From what I can see, they can see if there was ever a claim on that address, and is it like every insurance provider seems to be able to get those, right?
So more on the personal home and auto, if I'm not mistaken, there's specific stuff you could see. On commercial, it's more like if you're a business owner or landlord or developer, they usually ask, like, it'll be, here's a quote contingent to this.
Okay.
And then we would ask the client for it.
Sure.
Right? Because a lot of times, like, if you don't have a relationship for a client and is new to you, I've never had claims, right? Okay, so I'm giving you a price, but then when you get me that, now you've had 3 claims.
Right.
That changes everything in a sense too. Right. So what we do, I guess what good brokers do, we do a lot of preliminary underwriting ourselves.
Right.
And what I mean by that is, when I approach a new risk, whether it's any type of risk, I ask the questions. I prepare a nice package and a submission, and I send it to the insurance company. And that holds its weight as well, because they're like, this guy's done his due diligence. Obviously, they'll come back with a few questions here and there, but sometimes they'll be like, oh, wow, that was a great submission. Like, here you go. Here's your quote. Right?
Interesting.
So
okay.
It's just the biggest thing for me, taking the time, talking to the client, getting to know the client. Because for me, I'm all about long term. If I want a client, I want them to be with me for a long time.
Right.
And that's why I always
relationships, right?
It's such a key part, but it's about educating clients too. It's such an important part, because like the regular people, just normal people, you don't know about insurance. You just automatically assume that whatever I'm putting forth is the best option for you.
Okay.
But like some brokers don't ask the right questions.
They don't go to a deep dive. So
and that's the thing, right? So it's like, okay, well, what's your strategy? Like if you buy your first property, are you looking to grow? Are you looking to develop? Or what are you looking to do? And at least that way, for me, it's I have connections and like with lenders, with general contractors, stuff like that. So if someone comes to me and says, hey, you know, this is my plan. Do you know anybody? I'm like, yeah, happy to refer you to, you know, to good people. So it's the same thing like you do and we all do is just creating that network inside of your business to help your clients and go above and beyond. So.
Yeah, no, that's great. That's great. Like I know for us, this is an interesting question that we had, like in real estate, you know, needless to say, through COVID and all that, how we've run into the ebbs and flows of insurance, not insurance, but interest rates, and then having the fluctuation in value. And right now, the uncertainty in the market, so everybody's kind of on edge. And you know, as of this date, there's kind of some type of consensus that there may be some reprieve down the line this year when it comes to interest rates, but. Insurance has not been spared of challenges.
No, definitely not. And similarly to interest rates, insurance has kind of been like that in a sense. So there's two things called the hard market and a soft market in insurance. So a soft market is the best market you want to be in. Insurance companies are fighting each other for business. Rates are great. Capacity is there.
What were the underlying things to happen to have a soft market?
Yeah. So it's funny the way the insurance companies work. Yeah. Well, I can have an off the record discussion.
Okay, fair enough. But it's because you kind of wonder.
Yeah. So what happens in a sense is an insurance company, just like any other company, it's a business. Yeah. Right. Course. So it's like the way they do it is like premium in to claims out. Right. So what happens in a soft market is, I'll just give you an example. Let's say a building was insured for $10,000, 10 unit or something like that, right? Throughout the year, so you're paying $10,000 a year. Throughout the years, now you've had 3, 4, 5 claims. The claims equate to $100,000. So now that claim, well, you're at a loss ratio, right? So now you're at a 100% loss or 200 or 300% loss. So what happens is when insurance companies start lowering their rates, the claims start piling in. Now their loss ratios go up. Right? So generally they like to be 70, 80, 90% loss ratio. But now they're at the maximum. Yeah, maybe 100. So during the hard market in 2020, we were seeing some insurance company at 150% loss ratio. So what that did is...
And is that because there was more claims or just the assets or the repairs were significantly higher?
So COVID prices didn't kick in at that time. Okay. And then we'll kind of get back to that as well too. So ultimately it's because they were chasing bottom of the barrel pricing, or their pricing was really, really low.
So trying to get market share.
Exactly. Right. Okay. And that's really what it comes down to. So then when the claims started happening, they're like, oh, now, we're starting to lose a lot of money and whatnot. So now slowly and gradually they start raising their prices. Right. So when hard market hit, this was 2020 till about 2023, even up until a bit like last year, we saw people's premium, depending on what segment, transportation, like, you see the 18-wheelers, some people's policies tripled in price. Brutal. Yeah. Some people were forced to go out of business because insurance premiums were crazy. A lot of times people would see a 20% increase with no claims. Yeah. Right. So then
just because of whatever the industry at large.
Exactly. So that lasted about 2.5 years. And not only that, some people couldn't get insurance. Right. So maybe they had 1 or 2 claims on file. A lot of insurance companies would say, no, I don't want to insure you. So now we were scrambling to try to find, carriers that will do it. But then, like, let's say you're paying $10,000, now you're forced to pay $35,000, $40,000 a year. Yeah. Like, imagine this unexpected expense you as a business owner would have. It was so challenging. Now things are changing because, insurance companies, their loss ratios over the last 3 years have gotten a lot better. Okay. They're hungry for business now, which is great. Capacity was also an issue during the hard market where, let's say a building was $100 million before one insurance company would take it, But
why do you think the loss ratio skyrocketed so much during the 2020, like what happened?
So it was literally the 10 years before that led up to that time. Okay. So during the soft market, which usually lasts anywhere from 7 to 8 years, that's where premiums remain low. Okay. So during those years, that's when all the claims pile on, right? So then the profitability goes down, and then it's like it's that spike, and then it starts going down. Okay. Lasts usually 2-3 years, and it goes back down again. Yeah, it's a cycle. It's known. It's kind of like the real estate market.
Yeah. But
Not real estate, sorry, stock market.
Yeah.
You know, you have your bull and your bear market. Usually,
a lot of times that's on customer confidence, or like in real estate, a lot of it is interest rates dependent, right? So I'm curious if there's a logical ebb to that flow when it comes to insurance, because if you get a bunch of claims coming in, you kind of wonder like why.
Mm-hmm.
You know, with real estate, they purposely increase the rate or decrease the rate, so they forcefully push, you know, values up and down by proxy. But in insurance, I'm curious, like, is it because the insurance companies aren't doing anything specific to get the claims up or down? There's something happening on the market that's triggering that.
Yeah, for sure. So it could be like a lot of it too is going back to, like, you know how you said, do they vet a client or stuff like that? Like, you know, if you're a landlord and you just don't care, you don't, there's no upkeep in your building, you don't change your plumbing, you know what I mean?
Yeah.
And the truth is, some landlords are like that.
No, I know.
You know, the best landlords that I see, generally their claims are incredible. And I sit here and I scratch my head and I say, how is this even possible? Right?
On the volume.
So, and that's the thing. So, and these people might have 500, 600, 700 doors.
Yeah. Yeah.
You know, sometimes they'll create a buffer, a contingency that, okay, well, anything under 50K, we're just going to repair ourselves or whatever.
Right.
We don't want to get insurance involved.
Right.
But then you have other people that would make a $10,000 or a $5,000 claim for small water damage or something like that.
Yeah.
So it's little things like that that pile up over time.
So it'd be
too.
somewhat of a screening of the right clients.
Not screening, like the insurance company will still write it, but ideally, like now, you know, older buildings, right? Like buildings built in the 1900s, or a lot of insurance carriers don't like that.
Like, it's so funny because one of the conversations I don't think I've had a claim.
Knock on wood.
Probably had a few claims, but I mean, what I'm getting to is say you have an issue arising, you know, you're exposed to an issue, and a lot of times you're like, I call the insurance company, I say, okay, I'm considering just paying off. Like, what is the implications of going through a claim as opposed to not? Because for us, the more you have, the more you're exposed to that. So if I go for a claim and then my insurance rates go skyrockets the next year, then it may have been more beneficial for me to just pay off the repair or whatever had happened and just deal with it and not do a claim, and just make sure you keep those premiums low as much as you can, right?
So that's it's always a discussion we have, right? Anytime a client calls me, they want to put a claim or they had a claim, I always say, before we do it, let's talk about it first.
Right. Oh, okay. So you do that as well. Okay.
No, because it's important, right? Because like at the end of the day, you know, insurance company is going to make their money.
Of course.
Right? So whether you make a claim or not, you know, there's always a way where maybe you make multiple claims and then they say, you know what, Dan's no longer a profitable client for me. Right. We're coming off risk.
Yeah.
Well, now it makes our job challenging because now we have to go to another company when you have 3-4 claims on file.
Right, that's tough, yeah.
So what do you think is going to happen? Your prices are going to skyrocket even more. So generally, these are the discussions I always have with clients, right? Let's make claims worth making claims for.
Yeah.
You know what I mean? And it's important because if you came and said
that's an interesting,
so because if you said to me, hey, Karim, this is a $5,000 claim, okay, like how much is it going to cost you? Oh, like, you know, I have in-house guys, I can get this done for like $2,000. Okay, well, it doesn't make sense.
No.
You know what I mean? So
do it.
Yeah, so just stuff like that, right? But if you had like a massive water claim that's like $200,000 or even 60, 70 grand, then okay, let's look at that and let's make the claim. Yeah. So the way it works for profitability is they look at your last 5 years. Okay. They look at how much premium you paid to how much claims you paid out or they paid out. Sure. The profitability they like to see is anywhere from 40 to 50%. Okay. And in their eyes, you're a good client.
Interesting. So the profitability, meaning they didn't pay more than 40 to 50% of whatever you paid
of your premium amount,
whatever you paid in.
Yeah, into the claims. Yeah.
Interesting.
So that's ideally when insurance, and we go back, right? And we like, this is our job to fight. Okay, well, you've made money off this client. Right. Because think of it, they generally operate at, 70, 80, 90% loss ratio. Right. So if you're 40, 50% loss ratio, that's really good for them. Yeah. Right? Okay.
That makes a lot of sense, yeah.
But as a whole, though, real estate has never been a profitable business for any insurance.
Oh, no.
Residential. Because the perfect example for this is, let's say you have, 25, 30 unit wood frame building. You're probably paying anywhere from 10 to 15 grand a year, let's say by ballpark, for insurance. Yep. Well, if you have one water damage claim, it could be like $100,000. If 2-3 units are affected, so they say right now water's the new fire.
Yeah.
Like, how often do you see really fires happening in the city? It's rare, maybe one, maybe a couple a year, but there's so much water damage. You see, you know, tenants leaky, like overflow of a tub. They, you know, maybe they turned on the dryer. There's something with the dryer, is a bad coupling or something like, you know, that caused water damage.
Yeah.
You know, and then anytime it seeps into 2-3 floors, now it's like, oh my God, then there's like mold potential, and there, you know, you have to hire remediation company to come right away. So it's
they add up
crazy.
really fast.
And like sometimes I'll look at the quotes and I'll see like 200 grand.
Oh,
I'm like, that's wild. That is crazy.
Yeah.
And it happens, right? So literally you're paying 10, 15, let's say 10,000 over 5 years, that's 50K, right? Wow.
You do a $200,000 claim, you're no longer in the...
And it's not just you. It could
you're
be,
on the naughty list really quickly.
It could not, but not just you. It could be the whole pool, right? Because real estate is a pool.
Right.
So it's like...
a pool of people with the same assets.
Exactly. And then they're sharing, you know, the risk. So you and I and Mike, let's say, you know, we're in that pool. Well, you and I have never had a claim, but Mike is claiming like crazy. Well, our rates are automatically going to go up.
Right. So we got to make sure Mike doesn't overflow stuff. Exactly. That's what I heard anyways.
Exactly.
So, Karim, what are the common misconceptions that you've faced with the insurance industry, like from landlords, and then like how do you clear that up? Because I'm sure there's misconceptions. You've cleared up a few with me, just having a discussion. But what are the common ones?
Cheapest is the best.
Okay.
Just like anything.
Okay. Okay.
You know, people. And I respect that. A lot of people are very price driven, and that's okay. It's everybody's right. You know, I like a good deal. Everybody likes a good deal. But it's just understanding, you know, the policy that you're purchasing.
Right.
That's the biggest misconception.
Okay.
Where a lot of times people will come, or, you know, what I do generally if I meet new people or new clients or prospects, I say, you know, let me do an audit on your existing policy.
Sure.
So we'll just go through it together. You know, like a lot of times they say, well, I'm paying this much, like why is this more or why is that more? But then when you start putting stuff into perspective for them, then they start understanding. And that's where I feel like education is such a big piece, because you know, a lot of people that buy insurance are just like, oh, somebody told me I need it. You know, you're going to the lawyers, you need to close on a refinance or a purchase or whatever. You know what I mean? Because usually we always get the call 2 hours before someone's going to the lawyer's office.
And like, oh, you need to add this thing, or
you know. So I think that's a big misconception. Going back to COVID, construction prices have skyrocketed. So the biggest right now, what I'm seeing a lot of is values of building. So a lot of landlords, owners, developers. That's it. You know, back pre then, you used to be able to, the going rate was maybe $200 a square foot to build. Now could be anywhere from $250 to $300 for a wood frame. Concrete is $400 plus. So like, how are you insured? Is your building to value? Have you had that discussion with your broker since COVID? Hey, am I insured properly?
Right.
Are my values accurate?
Right.
And that is, I see that
that's
a lot.
Important.
Extremely, because and I'll tell you why. Every policy has a co-insurance clause. Are you familiar with co-insurance?
No.
So the insurance companies expects the policyholder to insure a building to 90% of its value, or 80%, depending on what the co-insurance is. So perfect example, if your building is $1 million, the insurance company wants you to at least insure it to $900,000.
Professional, reliable, local. DORE Property Management has been Ottawa's choice for 20 plus years. Call 613-227-0000 or visit dorerentals.com.
The reason for that is you're being honest with them. If you told them the building is $500,000, well, now you're only paying premium on $500,000 and not on $900,000 or $1 million. So it being underinsured, especially in a property claim, insurance companies will get a replacement cost appraisal at their own dime. Then they say, well, wait a second, your building is not $1 million. It's not 500, it's $1 million. Well, now there's a penalty. It's a co-insurance penalty that applies to how they pay you the claim, and you become co-insured.
Okay.
So now you participate in the claim. So there's a form.
So if it's not insured to its proper value.
Yeah.
Interesting.
That's the biggest thing. So that's where, like, during COVID, that's where I found, like, what I did a lot with my clients is sit down on the renewals and let's look at the values. Are the values properly? Do you feel comfortable with this?
Yep.
And then we would go back to the insurance companies and say, are you guys comfortable with this value? Like, yeah, we're good.
Yeah.
So again, they have internal tools and resources they use, to determine price per square foot rebuild, depending on, what type of building is it multi-res, wood frame, is it high rise?
Yep.
Is it an industrial? Is it a strip mall plaza? Is it a warehouse? Right. So it all, like, and we have tools internally too, to kind of gauge and help. And, but we always recommend to clients is, if you've never done one, get a replacement cost appraisal.
Yeah, I think it's important because I have somebody I know very well that had a fire several years ago. And as he's going through the cleanup, I guess the insurance provider realized that he wasn't insured to the value of the claim. And, like, literally from one day to the next, there's people there doing restoration and they're out.
Yeah, that's crazy.
And I'm like, whoa. But I mean, it's dollars and cents, right? So obviously those years you may have saved on that policy, but now you have a claim that exceeds it. Yeah. And next thing you know, you're like, okay, here's a check for your claim. You're on your own for the rest. And
honestly, Dan, it's not worth it.
That's a rough.
And I'm not saying this to be an advocate to my industry, but it's because I've seen it.
Yeah.
What you save to what you lose,
it
just never makes sense.
Yeah.
And at the end of the day, like, for me as a person, I always want peace of mind. I want to sleep good at night, and I don't want to worry about stuff.
Yeah.
And it takes anybody just to get dinged once.
Yep.
Then they're like, you know what? Then they start having that mindset. Is like saying, I just want peace of mind. I just want to make sure I'm covered. I just want to make sure,
Yeah, and I think that's.
And for business owners, it's such a crucial thing because, like, as you get into real estate holdings or a business, you're small to mid-size, even large corporations, like, nobody wants to worry about stuff because you have so much other stuff you're worrying about.
Yeah.
It's the last thing you want to worry about.
And
right?
It happens fast. Yeah, no, I get it. And I know I had a note here to ask you how you adapt to change, but I think we kind of covered the fact that the increasing in value, you're adapting by revising the insurance policies and what the coverage is. Is there anything else that you needed to adapt with?
I think it's just keeping your ear to the ground, understanding the segment of business you're writing, being in touch with insurance companies, underwriters, the discussion, constantly. Like, a lot of times they come visit us. They do their rounds, visit brokers, and we ask. We talk about appetite. We talk about, hey, what are you seeing in the marketplace? What can we expect for rates? What do you see of potential? Like, I always talk in this segment, what are you seeing for claims right now?
Right.
Are you seeing any claims going sideways? So it's just educating myself so I can be the best for my clients.
And you know also where to steer the business, right?
Yeah,
so
that's
if somebody has multi-res versus,
And then that's really what it comes down to at the end of the day. I guess what sets me apart is just knowing people's, like, just asking. I ask a ton of questions, and I'm just curious by nature.
Yeah.
I love business owners and I love, entrepreneurship and stuff like that.
Yep.
But asking the right questions to make sure that, I'm doing the best job for you, you're being covered properly. And what's good about our organization, because it's so big, if I don't know the answer to, I have so many colleagues that are experts in manufacturing and cyber and professional liability and reps and more. There's so many different specialists within our organization. You just pick up the phone and call somebody and they help you out on it.
It's a great resource to have.
Yeah, totally, absolutely.
To have the Rolodex of people within the realm.
Any
of the
broker
company,
that
right?
tells you they know everything is lying. Because there's so many different types of insurance. Every business is different, from a contractor to a manufacturer to a tech company to a architectural firm to a real estate developer.
All different risks, all different.
For the most part, a lot of the foundation is similar. On the type of coverages, but then it's like when you're getting into the nitty gritty, the specialties, what they what they do, asking the right questions. Like, it's just like anything, right? You go to a lawyer, an accountant who specializes in real estate. He's going to ask you the questions that another lawyer who doesn't specialize in real estate will. Same thing for me. When I start talking to you about values, what's your indemnity term, what's your liability limits, how are your policies structured, stuff like that. Generally, a lot of other brokers are not asking you. The good ones are, but a lot of people won't ask those questions. So that's why it's important to.
A lot of times, people, like you said, I think you hit at the beginning. A lot of times, they're just looking at price without necessarily going through anything else, and as it's somewhat of a disservice when you think about it.
I completely agree, because as a business owner, I'd want to work with the best. And it's that concept, you know, like I want to work with the expert. I want to work with the best. So for me right now, just knowing how I am to clients, anytime if I want to enter into any venture, I call and say, who's the best lawyer for this? And I don't care to pay more.
Yeah.
Because I want that peace of mind knowing that I have the best person on my side.
Yeah, that's perfect. And what are the insurance essentials? Like, I mean, if I'm a landlord or, you know, I own multi-res buildings, like what are the essentials that you foresee, like these are must-haves? Right?
That's a fantastic question. So multi-res, obviously the value is the biggest thing. Make sure you're valued properly. Are you insuring, you know, your contents inside, like your appliances?
Yeah.
Just pretty much, you have flood, earthquake, sewer backup. These are very important. For me, one that always, it's the simplest one, but I always catch other brokers sleeping on it, is your indemnity period, which is your loss of rental income.
Yeah.
So on a standard insurance policy, insurance companies give you 12 months, business interruption, loss of rents.
Yep.
I always push, like kind of selfishly almost force clients to take 24 months.
Yep.
But
Because
when I say
12 months is fast.
and that's the thing,
If you
right?
get a major claim.
So you nailed it. And a lot of people don't understand this concept, and that's how I explain it. And for the difference to insure your rental income for an extra year, people are like, oh my God, it's that cheap.
Yeah.
You know,
That's been
so
my experience.
it is. And that's what I tell. So, you know, the rule of thumb, if you have a total loss, right, it's going to be at least 6 months before the claim gets settled. And maybe rebuilding starts.
Not even, and you'd be
And
a
then
year and a half or 2 years before you go through the whole process.
So a lot and I explain after 12 months, do you have $10,000, $5,000 a month to pay for your mortgage? No. Well, what do you think the lender is going to do?
That's right.
So that for me is the biggest, probably one of the biggest. Liability limits are a big thing. I see a lot of people with like maybe $2 million liability limit. Depending on the size, and you know, if you have like a nice good sized portfolio, you go 5 million, maybe do like an umbrella, depending on how fast you're scaling, you know, to buy extra liability. It's that peace of mind as well too. Generally, umbrella is a lot cheaper to purchase than your standard, you know, 5 million.
Okay.
Some policies have, you know, special endorsements where you can potentially claim if your tenants like vandalize the property. Generally, that's excluded in a policy.
That's
So those are really the key. Another key is tenants insurance. I think that's such an important piece.
You mean mandating it?
So the Ontario lease, I think under Section 11, if I'm not mistaken, has a check mark of like, hey, is the tenant required to carry insurance or not? I always say, make sure you sign on it. That's a big one. And then just asking for it before they get the keys. But I talk to landlords and say, create a database and then ask people for the insurance certificate every year. Right? That's such an important part. And people say, Karim, well, why do tenants need to carry insurance? I said, well, I'm glad you asked. So the easiest thing is their negligence, right? So for instance, I'm your tenant in one of your rentals, Dan, and perfect example, I left the tub and overflowed and caused them. I'm telling you now. You know, tub overflowed.
Let me get on that.
Exactly. Tub overflowed and caused damage to, you know. So now your insurance company's going to pay for your claim. Any damages you but
they go back to the tenant's insurance provider if ever to settle that claim.
You nailed it. It's called subrogation. That's the terminology for it. So your insurance company would sue the tenant's insurance company for their negligence or damage they caused. Now, what I always say is, okay, imagine the claim's $100,000. Well, and then now the tenant doesn't have insurance. Well, Karim, what happens? Well, your insurance company will still pay for it. But now it goes back to what we were talking about earlier.
Exactly.
Now you're no longer a profitable client. They might boot you. They might do this and do that. Right? So then we could say, I get a lot of, well, we can't force people to have insurance. I'm like, well, it's under the lease. And then annually you say, hey, it's part of your lease requirement.
We've experienced similar issues in that, and tracking insurance policies is tough. Because in a lot of cases, what ends up happening is somebody would give you an insurance certificate and they cancel it after, and you're none the wiser. Mind you, one of the suppliers we use now
is it Belgium?
No.
Okay.
It's a company called Apollo Insurance, and Apollo they're embedded in our process.
Okay,
so if a tenant applies, we ask for them and we send them the link. But the deal we have at Apollo is because it's done through us, if the tenant cancels, we're kind of like an additional insured, it notifies us. So at least we know and then we can act on it. Because if not, then we have no clue.
Yeah.
And like I said, they can give you a certificate, but then if they cancel, there's no coverage, right? So
literally
nothing mandating the insurance provider to let us know.
Yeah.
Unless we do it the way we do it now, right? So it's not foolproof, but it's pretty close to it.
That presented to an insurance company is a A+ client.
Yeah, yeah.
When you can show somebody who has a large real estate portfolio, you know, this is what they do. You know, this is how things are done. The biggest thing too is snow removal.
Yep.
Slip and falls is the second largest, claims.
I know.
So your snow removal contractor, are you vetting them? Are you asking them for a certificate of insurance?
Yep.
Is your company or your holding company being added as additional insured on their policy?
We try to do that, but some will not. So for XYZ reason.
There have no legitimate reason not to.
But a lot of times what ends up happening is for them, and we experienced that, we changed suppliers on one building last year, and the logic was for them, like, we have hundreds and hundreds of clients, so we can't add everybody to our insurance policy, right? So it's interesting. But yeah, I mean, having them as additionally insured, obviously, then we're not fighting against each other if ever there's a claim, right?
Yeah.
But sometimes they misinterpret that, like, well, I don't want to insure you, but you're not really insuring me.
Exactly.
We're just making sure that if we get sued, that we're not suing each other.
That's right.
Right. So
no, and you nailed it in that sense. I think for them, it's a lot of paperwork and a lot of certificates they need to issue. But for me, it's, hey, you want my business? Like,
interesting.
This should be a prerequisite.
Maybe you can give me tricks after on how to force them to do it.
Yeah, for sure. Absolutely. So, that it's things like that, snow removal. Yeah. Now, one thing, like a commercial real estate is a bit different because you're bound by like a commercial lease.
Yep.
A lot of like requirements in there, indemnity agreement. So that's a completely different
That's different, yeah. Multi-res not like that.
For sure. Now, the beauty about commercial is you can ask to be listed as an additional insured as the landlord and then ask for like a 30-day notification. So automatically, if any policy gets canceled, you receive notification in the mail, right? So going back to what you guys do with Apollo, it's rare that people do that. Right. It's more like old school, hey, just, doing this, doing that. But it's nice to know, like, I'll refer people to Apollo. I'd love to kind of hear more about it.
Yeah, we actually had them on a podcast.
Did you? Okay.
Yeah. It's pretty solid.
So it makes sense. Yeah. And I think that's the biggest thing.
And it just helps, right? Because it helps cover everybody, right?
And that's what creates a stable insurance program. In our industry, risk transfer is such a big thing.
Yeah.
Everyone's trying to transfer risk to the next person, whether it be through contracts, through, insurance, stuff like tenants insurance, stuff like that.
Yeah.
Generally in claim situations, like let's say for business owners, contractors, whenever there's disputes, the first thing they ever look at, the claims adjusters, is, hey, send me the contract. Can I see the contract?
Yeah.
Because they want to know who's at fault and whatnot. So
exactly.
I can't emphasize enough too for business owners as well. Like make sure you have a really solid contract when you're talking to.
Yeah, trying to minimize that risk.
Yeah.
No, that's interesting. And one last question, because I know I'm going over your time. So we're
It's already been that. That's great.
Yeah, I know. This is what's fun with conversations like this. So at Hub, like, what's the company values and leadership and culture? Like, what does that look like? Is it different from what you've experienced in other companies, or what does that look like?
So Hub, what I love about Hub as a whole, it's a massive organization, and organizations generally of the same size are very different. For us, my experience so far has been with Hub. Entrepreneurship is such a key importance for us. Whether it's executive management, our managers, everyone encourages it. It's such an important. If I come in with a great idea, they say, okay, Karim, I love it. Put together a business plan and let's run with it.
Nice.
Right? Where like maybe a lot of other brokerages or whatnot, there'd be a lot of red tape. Right. So for us, it's trying to be better, trying to be leaders, trying to get to the next level, and just finding creative ways to do it. Technology, we're investing a ton of money into technology. Thus, every business owner should be right now.
Yeah.
Right. So, but yeah, the core values, like team, like our office is pretty small in Ottawa, but it's like a family, more kind of like what you guys, what you guys build here, which I love. But for the most part, everybody's very easily approachable, from the president to the CEO. You can talk to anybody. It's kind of like an open door policy in a sense. So it
sounds like a fun place to work.
It is. Yeah. It feels like for such a large organization, it feels like it's a family run business in that sense.
That's good for you.
Yeah,
that's awesome. Hey, Karim, thanks so much for joining us today on the DORE Podcast. It was a pleasure to learn about your insights, where you come from, knowing that you're a local guy and that you guys are looking to expand the footprint for Hub. So we appreciate you coming on and explaining your, and I'm sure we're going to continue this conversation offline.
Sure.
But
I appreciate it, Dan. This was great.
Yeah. So for anybody looking to learn more about you, my understanding is that they can go to hubinternational.com. Is that correct?
That's just our generic website.
Okay.
I can kind of send my contact info, my email address. People can reach out to me on LinkedIn as well too, and I can.
So we can put that in. Yeah. Okay. Sounds good. So the best way to reach you would be through LinkedIn.
Yeah, LinkedIn or email or just call me directly. Ideally.
Fair enough. Okay. Sounds good. And for all the listeners, thank you for tuning in. Don't forget to like, subscribe, and comment. That's what Mike tells me to say at the beginning, at the end. And until the next time, I'm Dan Dore, and thank you for listening to the DORE Podcast. Thanks for tuning in to another episode of the DORE Podcast. If you're an entrepreneur or investor focused on real estate in Ottawa, we want to hear from you. Apply to be a guest and check out our video content anytime on YouTube.